Hi, everybody. Welcome to today's session on first-party insurance coverage. I'm Jens Johanson with J2 Building Consultants, and today in studio we've got Dan Zimberoff. He's an attorney that specializes in construction defect and insurance loss recovery, and we're here today to talk about finding money for your repairs. And this is one of the biggest challenges we have as an engineering firm that helps guide building owners or boards or other decision makers about how do we pay for these repairs. Now that we have a problem, or now that we need to do a restoration, how do we pay for this? And in today's topic, we're going to talk about first party insurance coverage and how this is kind of an exciting new piece of a way to find money, and also dispel some myths about just what it is and what it covers and what it doesn't cover. And so today we welcome Dan into the studio. So, hi Dan, thanks for coming in.
Yeah, good morning, Jens.
Yeah.
Thanks for having me here in the palatial J2 studios.
Yeah, absolutely. So tell us a little bit about, give our audience a little bit of a feel for who you are and what you do and what you specialize in. How long have you done it?
Sure.
Or maybe some personal piece about you.
Yeah, absolutely. I'm with Barker Martin. We're a firm that just specializes in homeowner association, construction defect, and anything that touches an association. Myself, I'm a second career attorney. I was in the Navy for about 10 years, and then went to law school while still in the Navy. Came out here in Seattle in the mid-90s. Started practicing. Did various background, insurance defense. I was a prosecutor for a while. Then about, I guess it's been about 13 years ago, kind of fell into the community association world and been focused on that practice for the last 13 years. I started as a liability attorney, just proving our case from the plaintiff side. And then, as you say, insurance is where the purse strings. So I became an insurance attorney. And then as the insurance companies were appealing cases, I became an appellate attorney. And throughout my 13 years here, I've done all of it.
Right on. So what'd you do in the Navy?
Flew jets. Flew
jets?
The F-14 Tomcat, which is now a museum piece. You can see one out in Bowen Field out
Nice,
there.
nice. So you
from
were
Top Gun.
You were Top Gun.
I was.
That's cool.
Yep.
That's a neat piece. So what's a personal piece that you want to share with
A personal
our
piece for the audience. That
Do you
I like to play hockey. In fact, I played just a few hours ago last night around the corner, literally around the corner
Oh,
at the
wow.
Ice Center.
Oh, nice.
I play beer league hockey.
And you don't have any bruises or any missing teeth?
I wear the full face mask because some of my teammates don't. They're younger and
Wow.
probably it's a badge of honor if they come in missing teeth or big slashed
Wow.
faces. But yeah, years ago I used to play goalie when I was growing up. I think I got hit in the head and started playing goalie. And then as an adult, I decided now I want to get out and have some more fun,
Yeah.
mix it up. But I wear the full cage.
Hey, that's great.
Got to keep these.
Yeah, that's right. Hey, we're gonna do a video, so you don't want bruises and black eyes.
That's it.
So let's get into the topic. What first party insurance coverage? I mean, that sounds it sounds boring. B, it sounds ominous. First party. What's a first party?
Yep.
And so break it down for us a little bit, just kind of on a high level. What type of do I have to have a special insurance policy?
Sure.
Just give us a little bit on that.
Sure. So for the everyday person out there, a homeowner, you're probably used to two types of insurance. You have car insurance, most likely,
Mhm.
and you have home insurance, property insurance. And if you have an accident, if you have an accident, you bump into something, you may file a claim with your insurance company. That's a first party. It's your insurance company.
Okay.
If I hit you, Jens,
Mhm.
and now I'm liable, and you're going to seek insurance from me, that's called a third party because
Okay.
it's my insurance that you're going after. Well,
Okay.
the same is true for property insurance and
Okay.
home. So whether you're a single-family homeowner, or in the case that we work many times, multifamily,
Mhm.
condominium associations, they have property insurance. If there's some type of lawsuit, a construction defect lawsuit against a developer, that claim is once again third party. But what's happened here in Washington, and has spilled out to other areas, I mean,
Mhm.
certainly in California and now Oregon as well,
Mhm.
the newer claims of, in Washington, it's primarily because a case came down from the Supreme Court in 2012
Okay.
that broadened the availability of homeowners to go after their own insurance.
Mhm.
They're a first party. So that's really the distinction. Third party is if I'm going after someone else's insurance. First party if I'm going after my own.
Okay, so we're talking specifically about condominiums here. So in construction defect, or that could apply to apartments. It could apply to commercial buildings. It could apply to
Absolutely.
anything. So what's the difference between construction defect lawsuit or insurance and first party insurance that we're talking about?
Sure. So construction defect, third party insurance, there's been, the last decade, 15, 20 years, there's been a huge amount of that litigation. I think most people are familiar with that. They understand it. Oh, somebody constructed the building incorrectly, a general contractor, developer, I've got a claim against them. But what isn't as well known, because up until, at least in Washington here, until 2012, they were very difficult cases to prove, is, hey, I may be able to go after my own insurance company when I have property damage that's not caused necessarily by a third party. Or maybe it's caused by a third party, but it was 15, 20 years ago, a building that was built in the 80s or 90s,
Okay.
and the statute of limitations is long past. Well, there may be some funds there, and that's what we're finding in the last, since once again 2012, there's been just an explosion of these cases. So there are certain requirements that need to line up for that coverage to apply.
Okay. So before we jump into that, the two questions on my mind, you mentioned Washington and Oregon and California, but does it work in other states, and why or why not? So these are kind of national insurance carriers, right? They're
Exactly.
okay.
National insurance carriers, but it really depends on the law of, well, I shouldn't say it really depends. It depends on the insurance agreements themselves, and many of these agreements are universally used. They're ISO forms, the insurance organization that writes them, that are standardized. Then they're tailored by insurance companies by region. So the insurance, many times the policies are going to look the same whether you're in California or Idaho or wherever you may be. But the law is distinctly different. Generally speaking, Washington State is a pro-insured state, similar with California. Oregon, not so much. These claims can be more difficult in Oregon. There's really two components. There is the underlying coverage, and that's either it's covered or it's not. And then it's how the insurance company handles that claim. And that's where in California and Washington, by law, by the administrative code and the insurance requirements, they have some very strict guidelines and policies that they need to follow. And if they don't, if they stray from that, then there's a potential other action that's called a bad faith claim.
Okay. So before we jump into that one, who is the audience is watching? What is the target market for this? Is it a brand new building? Is it a 20-year-old building? What's kind of the target market for ideal recovery on these first party claims?
Good question. It certainly would not be a new building, because the type of damage that's covered here is ordinarily going to be the type that is significant damage. Around in the Pacific Northwest, where we have many times stucco or other type of cladding that traps the water, and over 5, 10, 15, 20 plus years, you've got that soup that's happening behind the cladding. So ordinarily it's going to be an older building, because it's not just any type of property damage that's caused. It has to rise to the level of either in a structural impairment or a structural failure component, or depending on the specific policy, it may be based on a wind-driven rain peril type of loss. But you're ordinarily looking at an older building and significant substantial damage.
Okay. So, and does it also have to be hidden, or what's called in insurance terms latent damage? So I've got a 30-year-old building. I open it up and I find a bunch of damage. Yay! I just won the lottery. Or are there other little factors there?
Sure. There's certain. When I said initially that a lot of things have to line up, that's one of them.
Okay.
In relation to both knowledge, notice. So when you say latent or hidden versus it's known, any type of insurance, if a insured knows that there is some peril, that there's some damage occurring, and doesn't do something about it or notify the insurance company, then certainly the insurance company may be able to deny on that.
Okay.
So ordinarily, almost exclusively, yes, we're talking about hidden damage that the property owners, the association, kind of didn't know about.
Okay.
Now, that we see that often, which is, well, what level of knowledge? Sure, anyone knows around the Pacific Northwest, if you live in a building that was built in the 80s and it was stucco cladding, and there's probably damage back there, but you don't really see it until it starts manifesting itself outwardly. Well, an association 5 years ago that, okay, they can see some exterior signs, they have somebody come and visually look at it and say, well, yeah, it looks like there's some issues, recommended some type of inspection.
Okay.
That usually is not enough to put them on notice that, hey, actually when they do open it up and find all this damage, it usually is going to be actual knowledge where they've opened it up, seen it, and then put it back and said, well, I'll wait till the next board to cover that one, or I'm going to sell now and not deal with it.
You've dealt with boards like that?
No,
Yeah.
no, there's none of those.
So what is the typical time frame? Once you know you have damage, is it 1 year, 5 years, 10 years?
There ordinarily isn't a time period as to how the board needs to respond to take care of the damage. It really is a case-by-case basis,
Okay.
and it's a reasonableness. I mean, are they dragging this out over 4 years? Are they working with the team, I'm sure we'll talk about later, and in some type of methodology. But there certainly are suit limitations within the insurance contracts themselves.
Mm-hmm.
I don't want to give formal legal advice in
Sure.
this
Yeah.
setting,
Mm-hmm.
what would trigger that, but just generally, once an association is aware or actual knowledge or should have knowledge that
Mhm.
they have a claim or they've got they potentially have a claim against the insurance, you
Mhm.
can tender it. Ordinarily, that's either going to be 1 year then or 2 years, depending on the policy language,
Okay.
for them actually to tender it, and then if it's rejected, to actually file a lawsuit.
Okay. So let's go back to how do we get here? How do we end up in this spot of needing to call our insurance company? And I think one of those pieces I'll add is as we're looking at buildings, for instance, on apartments or condos or even commercial buildings, when we're there to replace the windows or to update the brick or to update, repair the walkways, we'll open it up and find, oh my goodness, here's all this rot, here's all this decay. And I think one of the pieces we've learned, like you said, in 2012, just over the past couple of years, is to press the button and say, hold on, let's talk to your insurance company and see if they cover that. So that's one way we get there of this surprise of hidden damage. What's another way that somebody would even know that they had damage or need to call their insurance company even about that? So how would we get into this situation?
Yeah, and I think this is probably the most important piece of our video segment here,
Mm-hmm.
and that is, once again, what does that mean, and what should I do? How do I know?
Right.
It usually comes up in one of two ways. One is if the association is aware they have significant issues, probably looking at a strip and reclad,
Mm-hmm.
of the entire exterior. And as part of that investigation to get their hands around it, is the work that you do, quite a bit here in J2, is you'll do that representative sampling and that testing
Mm-hmm.
and limited investigation to determine, okay, yes, this is what's happening. And sometimes during that process, it's enough to say, ooh, wait, we've got, usually it's going to be structural damages, the big one. So any structural members, if you've got, shear wall could be sheathing, if you've got joists, if you've got, those aspects,
Right.
that's ding, 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 okay, that should be one.
Right.
Another one is, it could be just the level of damage that's underneath that's been hidden. So we're not
Mhm.
talking about, siding that's chipping, or trim that's falling apart, or
Mhm.
in the windows.
Mhm.
We're talking about you getting into the meat
Right.
of the building. Those, now what many people will do, or many associations or even association managers, they see a lot of damage and they tender a claim. Oh, we think there must be insurance for this.
Right.
I'll guarantee you 100 out of 100 times, 100 out of 100 times, and I don't do guarantees as a lawyer, that tender, the insurance company will do we will investigate, we'll send someone out, we'll have an adjuster, we'll look at it, and you'll get a report, and we'll come back and say, denied, 100 out of 100 times. If
Okay.
that's the sole way that you're tendering, and they're going to say, this is due to ongoing, damage, ongoing,
Mhm.
water intrusion, it's poor workmanship, and they're going to cite all the provisions of their insurance policy that
Okay.
say that's not covered.
Right.
And unless you have that knowledge, unless you're listening to this video or
Right,
watching this
right.
video, you would get that nice formal letter, and you've got a nice report from an independent expert, and you say, oh, we don't have coverage.
Right. sorry, case closed, we're
Right.
done.
That's
we've tried.
not necessarily the case.
Right,
I can't
right.
guarantee you by any means that there will be coverage, but I can
Right.
say that that's not necessarily
Right.
a showstopper.
Okay, so that's what we run into of we get this. I initially talked about industry myth,
Hmm.
and so
We're Mythbusters here.
Mythbusters. That's right. It comes out of your property policy, right? The
Mhm.
structure policy,
Yes.
which is there for fire, wind, rain, that typical type of disaster. But actually, it gives an avenue for this first party claim. And so on the first blush is somebody that the board is talking to. It could be their manager, it could be a misinformed attorney, it could be the construction guys, it could be a brother-in-law. Hey, my brother-in-law is an insurance agent. He says these things aren't covered, so
Exactly.
we're not even going to try. Or somebody told me that that doesn't cover that. Or we actually filed a claim and we were denied. So okay, sorry, we go away with our tail between our legs. So what happens when they issue that denial letter? Is that a good thing or a bad thing?
I wouldn't say it's good or bad. It's
Mhm.
expected if an association were to follow that path. But let's look at a different path.
Okay.
And a different path is you have a manager or homeowner that's watched this video or has heard from other means that,
Right.
hey, there's potential claim here. Let's right out of the gate, instead of give them the information that we think they are going to need to know, let's go to the experts and find out what information should we, which is going to be an expert like you folks,
Mhm.
right? And ordinarily it's going to include that structural engineer that you have on staff that writes a report that understands what those words are. So I want to be real clear here. It's not changing anything.
Mhm.
It's not trying to do anything, around. It's following the four corners of the insuring agreement,
Mhm.
and it's following the building is what it is.
Right.
Right. But here's the rub: is it's how you define it.
Right.
And there's certain words that can be used, and more importantly, there's certain words that should not be used
Right.
in that report. So now, right out of the gate, when you're tendering that claim initially, you're tendering it with an expectation there is going to be coverage, or at least there's not going to be an outright denial, and we can work through with the insurance company
Right.
to do the proper investigation based on the proper information to come up with the proper decision.
Right. And I think you've hit the intent and the whole meaning of this video. And it's knowing about it ahead of time, presenting it in a way that works will give you so much more success in this process than stumbling through it the first time, or stumbling through it and then realizing, oh, now I have to write another report or do another investigation or do another, and then you're backtracking and you it's just bumbled.
And
I've seen
there
a
are
few of those.
instances
Yeah.
where associations have cut themselves off at the knees because, inadvertently,
Right.
they didn't unknowingly,
Right.
but they rang the bell that could not be unrung.
Right.
And that's usually going to be in time
Mhm.
because they've just waited too long, and then we have that notice issue we talked about where they had
Yes.
knowledge. But it could be in a way that a report is written that's so damning that you can't recover from, because it really focuses on an exclusion that highlights neon
Right.
that it's almost you cannot recover from.
Right. Is there any potential errors and omissions or malpractice liability to a board or to a management group that doesn't file in time or doesn't do something in that year?
I'd say that probably exceeds a little bit of the scope of our talk here just on
Right.
first party, but
Right.
but absolutely, and that scenario is where a board has actual knowledge of damage that must be repaired, and if it's not, it's going to cause continual damage because
Right.
as you know,
So it's-
damage in this realm is not linear. It's not just based on time and amount. It's
Right.
more of a hockey stick. And if you're at the point where you're not taking action,
Right.
and now the costs are 100% to 100% of what they were 12, 24 months ago,
Right.
there's potential risk there. But another point I want to make before we end, and that is, what's the cost of this, or what's the burden on the homeowners?
Right.
And it's unlike a third party action, which ordinarily is going to take a full blown lawsuit and very contentious, and many times multiple parties. You've got a developer, you have a general contractor, you have subcontractors. Just think protracted
Mhm.
litigation, expensive.
Mhm.
These tenders, these claims, more often than not don't result in litigation. If they do, it's still a single party usually. Sometimes there may be multiple insurance companies. But the process to get there is so much simplified. You don't have a lot of discovery. You don't have all these witnesses. You have an expert. You have their expert. You may have some facts as to previous investigations or knowledge issues. But the universe is so focused here. And then the cost of what it takes. So assuming we're not going to be in court and we're just going through the tender process, they're going to have to hire you folks and your expert and your engineering folks to come up with the investigation and come up what's the scope of the issues and then a scope of repair. Anyway, well, that's the same information that's conveyed to the insurance companies.
Right.
So there's very little additional money and time that's required. So it really is. There's few no-brainers in life. I mean, this is one of those. Almost no-brainers that if you have that information and it lines up, move forward.
Yeah, what I tell boards that we work with is you're paying your premium. If it's a covered item, it's a covered item, and so go ask. Yeah. And so that's the piece. We've covered some of those steps. What we've alluded to the team. What does the team look like? Yeah. So now if I'm a board, I know I have an issue. We were working on the roof and took off. We were going to replace the roof. We opened it up. Oh my goodness! Look at all the trusses and roof system. It's all damaged. I call a knowledgeable expert that's working on it. I call a knowledgeable attorney that's working on it, and then what's the next step? You prepare the report in a certain way.
Yep.
You tender it in a certain way, and then what does this take? Typically 1 month, 6 month, 18 month. It's not as long as a trial. It takes a little bit of time. Can I keep working on the building? Can I keep working on the project while we're also doing a simultaneous insurance claim?
Yeah, you asked about 6 questions there,
yes.
So I'll try to answer them if I remember them all. Team, let's start with that. As we mentioned earlier in the video, normally there's going to be 2 ways that these come about. If you already have a team together, you're already doing a repair, and then, it's just worse than you imagined.
Right.
So you already have a team in place. You just would add a lawyer to that because there may not be a need for a lawyer initially. Okay. And then assuming your team already includes a structural engineer. So for you folks here at J2, you already have that in-house. Even though the initial design may have not needed a structural engineer, you have that in-house. If it's the other scenario, which is the association isn't sure yet what their scope is, they haven't funded it yet, they're not doing a full reclad, they're still in the initial stages, they may only have an expert such as you folks, or maybe they've gone straight to a contractor. They get into it. Okay, now assemble the team that's going to be the structural engineer, the attorney. One advantage, and I hope I don't sound too self-serving, is but if you get the attorney in early, then any work with a consultant is going to be protected under work product. There's certain privileges that may apply.
Gotcha.
Certainly advantageous to get the attorney in early on.
Right.
And then you had mentioned about what's the time period and how long. As I mentioned earlier, Washington, California have some pretty truncated periods of times insurance companies have to respond. Oregon, not so much. So they're on a short leash, the insurance companies, in time periods that they need to respond, as well as a duty to investigate. In Washington, the insurance companies have a duty to investigate. So if you just trigger enough initial hurdle, then you can put it on the insurance company to pay a big portion of that investigation out there now, and you can still have your experts then to piggyback on that. The time period, I'd say, whereas if it's a third party claim, we're looking at usually it's 2 to 3 years from start to finish. These within 12 months, unless you've got to file a lawsuit.
Okay. So talk about experience piece. You mentioned, hey, we got to bring in our attorney. Every board has an attorney that writes, the fines and the parking tickets and the collections for assessments. Is that the attorney I need to call?
No.
Okay.
And so unless that attorney also
what makes that attorney? What are the top things that you look for in that attorney?
Yeah, you definitely want to ask the questions. Is this part of your practice? Right. And it's not enough just to look on their website and see what their practice areas are. We do in insurance, specifically first party claims. Okay. Who does that work? Is it someone that has that specialty? And then how much? How much have they done? What are like any list of cases or referrals? Because it is a niche practice. Right. Insurance alone is a niche practice. HOA condo work is a niche practice.
Right.
the practice that actually combines those is razor thin. So there are people out there.
Yeah, and your firm does it.
Our firm,
Yep.
we have someone in-house that's all he does. He's been doing that for, I think, close to 15 years. You know, as I mentioned earlier, I have some experience in that as well.
Great. So a couple of case studies of success. And then is this kind of settlement? Is it 100 cents on the dollar, 50 cents on the dollar? So do you have a couple of projects
Good.
you share with?
Yeah, and it runs the gamut. I'd say anywhere from a low of, we've got a small project where there may be a $40,000 recovery to a large project, multi-million. But the point is, and it's a good point that you're bringing out, is under no circumstances that I've seen or I can imagine are you talking about 100 cents on the dollar. Because as we started with, the type of damage that's covered under the policy is not the universal. This is not the same as car insurance where you get an accident and you've got bumper to bumper, everything's covered.
Gotcha.
No, it is going to be reduced because we're not looking at trim, we're not looking at exterior, we're looking at, ordinarily it's going to be that hidden damage underneath. Now in Washington though, you get the get to cost, so the cost to get to it you can still recover.
Gotcha.
Oregon not so much, California you can. So there's a lot of factors that go into it.
Okay.
The bottom line for the listener, just for general information, no, we're not looking at 100 cents on the dollar. If you could get 40, 50 cents in the standard case, I think that would be a good outcome.
Yeah, awesome. Okay. Well, we've kind of covered the high points. We've painted with a broad brush. Do you have anything to add to that? And
I think the most important is, as we mentioned a couple times, is realizing that there is potential coverage there, and just because an association or an owner tenders, initially and gets that denial, as I said, 100 out of 100 times they're going to get that general denial.
Right.
Is not necessarily a denial.
Right. Good. Okay. Well, as we're wrapping up, we wanted to thank you for the time you've taken with us today to just learn a little bit more and better yourself, going into this year with some knowledge on kind of this new niche topic that we're talking about, first party insurance coverage. And so if you're still with us, that means you found this useful, and we'd be absolutely honored if you would share this, like us in all the usual places, even post comments below, and that just helps us spread our message to everybody who needs it. And so, as gents from J2, I appreciate your time. Dan from Barker Martin, thanks so much for being here, and we look forward to helping you with your projects. Thank you.